And now for our weekly commodities update, I'm joined by Peter McGuire, Chief Market Strategist for Asia Pacific at Baxter FX. Peter McGuire, welcome to the program.
Good morning, Whitney.
So let's start with the Prime Minister's visit to India. This decision over whether Australia should or shouldn't sell uranium to India has been debated for quite some time. How important are these meetings at the moment?
Well, they're very important, but remembering that we supply really 40% of the globe's uranium, we've got as far as supply. But more importantly, I think where India sits, having travelled there, I was there 5 years ago, and the brownouts as far as power shortages and power outages is alarming across the whole nation. And truly, Whitney, they need serious help. When we look at what's happened as far as China, as far as adopting nuclear, and of course Japan and other countries, it's really the saviour, I think, as far as a power source for their nation. So
do you think, though, that India will come to the table because they are a nuclear arms producing state?
Absolutely.
Will they, and they're not, signed up to the Non-Proliferation Treaty. So do you think that they will come to some sort of agreement or arrangement with the Australian government on that?
I'm not sure. I mean, that's a hard one to negotiate or think through. I mean, a population of nearly 1.3 billion people sitting underneath China, geographically, it's very, very hard. And then, of course, you go to the west and you've got Pakistan, Afghanistan, and then leading into the Middle East. So geographically, and then sitting under, of course, Russia. So, look, I'm not sure what India's thoughts are, but it's going to be interesting how it plays out and how Gillard manages this whole process.
And in your estimate, how much are uranium exports to India worth to the Australian economy?
Look, it's hard to put it on a dollar value, but I'm sure it's going to be substantial. But this is going to be the start of the whole engagement, and I'm sure if we don't get in, there'll be other nations, and you think of what Africa has. Africa has got huge, vast resources of all base metals, and I'm sure that'll be very much on everyone's radar over these coming decades as far as the commodity cycle continues its upswing over the coming century with the re-engagement or really the rebirthing and rebuilding of these whole nations.
So would you say then it's a very important relationship to develop, given that it has a potential to offset any drop in exports to China?
Well, exactly right. I think so. Look, when you think about what we've got here is an opportunity to participate, and I'm sure that we've got to really take the bull by the horns and make it happen. So yes, I think it's a win for us, and hopefully that India can be proactive in the other side of the debate and really come to the party. So if it's going to be, it should be a win for Australia, and I think it should be very good.
Aside from uranium, what other areas of resources do you see that would be of potential opportunity to export to India?
Well, when you think about I get back to the base metal side of it. Look, India's got some wonderful iron ore, but unfortunately it's not the same quality or the same grade as ours. But remembering that it's a shorter ship run to China, I think when you look at all other base metals, the rebuilding of that whole nation, from highways to buildings to construction to copper, you name it, I think we're going to be across nearly every sector. And we've had a little bit of a slowdown in the last probably 3 to 6 months as far as base metal prices going across. The only thing that's really rallied, Whitney, has been copper, but most of them are fairly quiet. So I can't see a lot of supply issues out there. Mainly it's coming from the demand side, and I think that we might be well positioned to take advantage.
What about soft commodities?
Well, when you think about that, if you're looking at India, you've got 1.2, 1.3 billion people to feed. I'm looking at that the agricultural sector has come off pretty heavily over the last, say, month and a half. Corn, wheat and soybeans, you may see a little bit further downside, but they've been at nearly record highs due to that terrible summer that they've had, or really the growing season in the States as far as the drought was concerned. Worst one since '56.
Let's move on to China. We've seen a raft of data out so far. There's also GDP figures due out later this week. What's your reading of the current state of the economy? Is it a controlled slowdown that's getting ready for some more stimulus?
Well, I think so. Look, it's hard to debate and it's hard to picture what's actually going on. A lot of people don't believe the numbers, but really I think it is a controlled slowdown. They've had a booming property market, but also it's the urbanisation. I think it's going, I was in China a couple of years back. It's going to be very, very strong growth, I think, over many, many decades. You've got all that urbanisation, and really people are moving from the country areas, as we all know, to the cities. and the storyline doesn't change compared to India. So people want a better quality of life. So when you think about what's happening in China, I think if they can hold at these 8.5% GDP numbers, they should be fairly contented.
But if we look at the iron ore price, it's been very volatile. You know,
Yes.
it dropped to 3-year lows, around
Yes.
$86 a tonne. Now it's bounced up 32% over the last month. Very volatile, very difficult to predict. Would you say that the health of Australia's resources sector hinges on whether the central government introduces more stimulus to even out the economy?
Well, remembering that they just put together a $1 trillion yuan or renminbi package. I think that equated to about 157 billion US, and that was for airports and shipways and infrastructure spend. I'm sure that will continue, and there'll be probably others released. But when you think about where it's going, there is no doubt that China will get re-engaged, and I can't see that really dropping off.
But do you think that the iron ore price will trend lower? I mean, will it be below the vital 120?
That's a hard one, Whitney. It's been volatile. I think it'll probably hold around in that $100 to $110 range. You may see it back under 100 in the short term, but I really don't think so. It's just been a very, very tough market to trade, and to think about, just sheer volatility from its highs going back about a year back.
I want to just briefly talk to you about gold. Now, it was due to break through to another level. It's come back off. It's sort of dropped, well below that. Is that a very unusual move, given that investors usually look at gold as a safe haven, and this is in response, my understanding, to global uncertainty and lack of growth in the global economy?
Well, that gold's come back to around about 1740. It's down a few percent, 3%, but it had a very strong uptick in the last really month and a half. So it's probably just having a little bit of a breather and a correction. The US dollar has strengthened, and we're 3 weeks out from the election, and it doesn't look as though it's going to be a landslide to Obama in any fashion or form. And people are undecided, so I think you're going to see a continued upsurgence for the US dollar in the short to medium term. The euro will get sold off, and I think gold will probably take a bit of a break, Whitney.
Peter McGuire, thanks for joining us.
Thank you, Whitney.